All right, guys. Let's start with US index. All right, so let me grab US dollar index here. US dollar index. Show. Sorry, guys. New setup. I had to set it up everything. So yeah. Okay. That is the 8th week in a row that we are having a bullish trend on US dollar. And US dollar was very, very strong last week. So it had a very strong week. Traders, they continue to buy the currency, and that leads, to a number of factors. So one factor, the biggest factor, one of the biggest factor was the PBOC. That's the People Bank of China, right? They decided to set a higher reference rate for the US dollar and Chinese yen. And then this, of course, made the US dollar even more expensive to buy with Chinese yuan or yen. I can't remember now. And then this, of course, made it more attractive to investors to grab US dollars. Not one of the other factors as well, was the release of the weakest than expected Chinese economic data. So we got the Chinese PMI, the services PMI report, and it showed us that the services sector in China had a contraction on August, which raised concerns about the health of the Chinese economy. And then, of course, this led to an increased demand for the US dollar because it is a safe haven, right? And then finally, one of the last one, those are the three biggest ones. The US economy released a strong economic data, right? So last week we had the services PMI report, and it showed us that the services sector in the US, it had expanded on a much faster pace than expected in August. And then, this data was released, I think it was on Friday, if I'm not wrong, or Thursday. And it comes along with a positive update on US weekly initial jobless claims as well, reinforcing that the view on the US economy is still pretty much growing very strong. Okay, so there are all of those factors combined to have this rise on price from US dollar. So if we grab the bottom here, that was on, it was on 18th of 7, so July 2023, and then now pretty much 470 points, a bit more, 500 points. After that's a 5% raise on the US dollar, right? So it is pretty strong. And of course, for this reason, I would like to keep buying US dollars. I had the target set at 105 last week. So we pretty much hit this target in the end of the week. Let me put it white here. So we pretty much hit this on Friday, right, on the 7th of September. And then we had Monday opening yesterday with a bit of a gap on the market. And we're going to talk about this gap soon when we touch on Japanese yen. But anyway, so talking about this week, this week we're going to have a few US release numbers. So very important economic data coming from US. One of the important ones would be the CPI, as we need to know how the inflation is going. So then we can gather this data to see how the Fed, how the German poll will be between towards the monetary policy committee, if they're going to be more hawkish, if they're going to be more dovish. It will depend as well on the CPI, as well the PPI. We're going to have retail sales, we're going to have unemployment, we're going to have manufacturing data, and we're going to have the consumer sentiment. Of course, the main focus, as I just mentioned, will be the CPI. And in my opinion, this is my opinion, I guess we can have a stronger inflation coming. So let me grab Google here very quick to us. Just a moment. I'm using two screens. There we go. Okay, so FinLogic's calendar, economic calendar. If we come and have a look at inflation for US, okay, I think it's tomorrow. No, it's on Thursday. Inflation here. Okay, United States CPI. This one. All right, so we're gonna have the United States. This is Thursday, right? So you can come and check here. Oopsie, sorry. Oh, this is tomorrow. Sorry, this is Wednesday, 13th of September, at 10:30. We're gonna have the core inflation rate, so month over month. We're gonna have the United States inflation rate as well, month over month, August. Inflation rate year over year. And we're going to have the core inflation rate year over year. Do you guys know what this year over year means? And there's always a month. So every month, you know, that has, so let's say year over year September or year over year December, it doesn't mean that, you know, they will take only 2023 to up to now. So January 2023 up to September that we are now. They won't take this data only. They will take the year over year. So they will take the full 365 days as the 1 year. So they will take basically from August to August, or, you know, this one is month over month. So August, from August to the next month, and so on. So every time you have like a year over year, August, or year over or month over month, it represents that it's from this month to the last this month as well, on year over year, right? But anyways, so let's have a look on month over month first. We had the previous inflation at 0.2. So that was on August 10, and the forecast was 0.2, and the actual came as 0.2. So this was on August 10. But upcoming release, you know, they are forecast 0.6%. 0.6%. This is a huge increase from 0.2 to 0.6. This is 0.4, so 0.4% up in inflation, right? If we look at the historical data here, most of the times, it came as forecasted, you know, most of the times, I'm not saying all the times, right? And we did had sometimes less than expected, right? So we can use this data to know that maybe they will come as expected, but already if it comes as expected, we're already going to have an up movement of 0.4%. So the actual right now is 0.6, and they're forecasting 0.2. The actual is 0.2, and they're forecasting 0.6. So we can expect already a up movement on the US dollar. Why is that? Well, I don't know if you guys remember, but I've been explaining this throughout those this webinar series. If I can open my Pine, just a moment. Let me try to open it. Okay, there we go. This is Windows 11, so I'm not too sure. Probably the same. Okay, so can you guys see my Pine? You probably can, right? Yeah, you can. Cool. So when we have inflation, you know, keep raising, we need the rates as well to keep raising, right? So we need both of them working together. So then the rates can actually surpass the inflation. Otherwise, people will keep spending and will keep making inflation. You're not making wouldn't be the right term to use, but they would keep, you know, let's use make, they would keep making inflation higher and higher. So then the central bank comes and restrict it, putting higher interest rates towards mortgages, towards people trying to borrow money, and just makes it harder for the society to live. So then they stop spending money and keep the bank and keep the money on their bank account, right? Now, this is pretty much what we're having on US. We are basically having a higher inflation where the Fed is trying to combat, they're trying to fight those high inflations, raising the rates. So they've raised 25 basis points last time, and I'm pretty sure that they will continue to raise 25 basis points this week. Sorry, not this week. Sorry, not this week. The next meeting, okay? This week, we're going to have ECB. I will talk about that later. So the market, it's currently expecting that the Fed already pause the interest rate hike at this upcoming meeting. But as I've mentioned, however, the strength of the US dollar this week, last week, suggests that the Fed may be more inclined to raise rates than previous thought. Because Jerome Powell had expressed a view towards MPC, the Monetary Policy Committee, the FOMC, the Federal Open Market Committee as well, that they will be data-dependent approach from now on. That means that they need to see data coming down. They need to see the economy cooling off to how can I say that, to take a pause into the monetary policy, right? But as we can see, the US dollar is pretty strong. That means that the people are investing on US. So that means that they have to keep raising the rates. So basically, just say, breakdown overall, US dollar is expected to remain pretty strong this week. This is what I'm expecting. Even more if those data that I've just mentioned, the CPI, the PPI, the retail sales, unemployment, manufacturing data, comes higher than expected. However, just, the market is closely watching the inflation data as the most important. So the CPI would be the most important for this week, as this could be the factor, that I've just mentioned that could lead the change for the Fed's monetary policy stance. If they do actually change to pause, that would be a huge short opportunity on the US dollar and try to long it against other stronger currencies. Like USD CHF would be a good short position if they actually change the monetary policy and they actually pause. If the Fed do that, then yes, CHF is a strong currency, and then we could do this. Anyways, so what are we looking now? What would be the best opportunities for us to trade the US dollar? Well, I have a few positions open. Again, euro dollar would be one of the, I think would be my preferable trade until, I think I haven't gave you guys my target last time, but it's on 105.58. Okay. This is my target right now. So yeah, I actually haven't, I didn't give you guys my target. I told you that we may had a bit of a consolidation in this area, and indeed we are having a bit of consolidation here. So where is my notepad? Okay, cool. So we are, last time we were here or here somewhere on these lines. And I've mentioned that, yes, we can keep coming down to the 107 area. We did touch the 107 area, and now we're slowly just retracing a bit. Look, just normal, I missed my entry on this week because if we look, this would be a very nice spot for us to trade, as it is a nice resistance sort of support area. Sorry, here, where is the box? Just a moment, I'm gonna use this one again. Yeah. So around this area here would be my short position. Unfortunately, I missed it. So there's no need to cry. Market always giving us good opportunities, you know, even better if we could come to this area here, but pretty sure we won't be able to go there far at the moment, especially if we break down these lows, right? So if we break down these lows, then yes, we may come and go to this 105.58 area. And if it comes pretty aggressive to that area, then I would say 105 would be my last target. I don't think we're going to have that much. If we do, that's good. If we do, that's good. It's just 580 points of difference, 58 pips of difference. But if we do have this push down, if you know CPI comes higher than expected, if you know if the ECB that we're going to talk soon pause the rates and all of those other things happens, then yes, it could line it up for nice potential short positions towards this area. Okay, but of course, if it breaks down, if it breaks up to these levels here, I wouldn't be looking anymore to trade this. Now, what more? USD CAD. Where is USD CAD? USD CAD here. Okay. USD CAD is pretty much again, you know, coming back for retracement. I wouldn't say that this is this is the full retracement. Maybe we can come down to those levels here. Oopsie, that's not good. Let me take this one. Like somewhere here, like this area, and then from there on, I may be looking to long positions, but I'm just not trading USD CAD at the moment. I'm more towards euro dollar and USD JPY when trading US dollar. But if you guys, if that fits on your trading strategy, that's lovely. It lines up with the fundamental aspects. All right. So I would just you know, keep watching it to retrace to a lower area. So then it would give me a better risk reward. I don't have much targets for USD CAD at the moment. So maybe at 137, that it's an even number, a random number, sorry. Let me see. Yeah, around that 137. You know, it's a nice 166 pips. And then after that, only like 137.5. And then we go from there on and on, right? So that would be it. I'm not too keen to trade this one. It's my personal take. Now, all right, let me open this one. USD JPY. I do have a few positions going on here. That would be more a day trade. But again, I guess we are on a very nice support area. So let me take this one again here. So this area here would be my long area that I would be looking to long, somewhere around here all the way to 150. Yes, I know 150 sounds like, wow, that's a lot of room to go. I know it's a lot of room to go, but I think we have the potential to come at this place. And I will explain in a minute why. But USD lines up for long. So it is a nice fundamental aspect that we just covered everything. So that would be my personal takes, you know, more towards USD JPY than euro dollar for if you want to trade long on US dollar. Right. Let's talk about euro now. Okay. That's a huge downtrend. We've been having this downtrend since 18th of July, right? So it is more than what? 550 pips. So that's 5,000 points in 500. So we are actually around a negative 5% move. So that's huge. That's a very big move. We can see that there is a lot of strength yet on the bearish side. Some people would be looking to long on here, maybe thinking that this is the bottom. Again, we are having a lot of strength on the bearish side. Anyways, so the euro had a bit of strength actually last week. Like it was pretty resilient to not coming even lower than that. And then in the Thursday, Friday, we had this sort of, trying to skyrocket, but, sellers engaged it and couldn't do it because the release of the weak Eurozone services PMI data resulted towards, this lose of strength to the upside. It was likely due to a risk-averse environment, to be honest. That there's no significant positive developments coming from the Europe during last week. So this, this up movement here, let me put in 1 hour or 30 minutes. Sorry, guys, I think I will get a cold because my nose is running a bit. So this from the mid of the week, this was Monday, and then Tuesday to Wednesday, somewhere around here, we did this up movement here. It wasn't any like specific reason why it did happen here. I can't see any we did have services PMI data weaker than expected on Europe. So there's only one motive for this uptrend here, like trying to develop a uptrend, trying to target those levels here. I know if buyers engage on the market, they would be looking towards take profit around 109, 108.5, 107, no, 108, yeah, 108 to 108.5. They would be looking towards those areas. I'm not sure if they can bring this price up that much, as we have on sorry. I don't think they have that strength to pull it up the price on that, that reason, as that don't have any fundamental data backing up a long position on on euro at the moment. So this week we're going to have a very important week for the Europe. We're going to have the ECB, the European Central Bank meeting. They will discuss, of course, the policy rates and the forward guidance they will have. Market participants, they're already expecting that the ECB to pause the rates. Last time they did raise rates, but she was how can I say that, she was like copying the Fed. She was like copying Powell. So she was like, oh yeah, that's good, but we need to go data dependent from now on. We're going to raise 25 basis point, but we're going to go data dependent from now on. So basically what the Fed say, right? So at the moment, I think, inflation is coming down pretty quick for Europe. So I don't see a reason why they would raise. So if they are data dependent, the data is there, it's coming, it's good. It's showing that the inflation is coming down. It's showing that services PMI is weakening. So I guess they will pause. All right. So I guess the ECB will pause the rates as a data, economic data begun to soften. However, if the ECB does hike rates one more time, it will be interpreted as a dovish move. So this could lead to a large upward move in the euro on the decision itself, and then after that followed by a large sell-off at the dovish comments from the press conference. So what we're going to have is, let me show you here on the economic calendar. Here. So at 10:15, we're going to have the interest rate decision, right? So they're expected to pause. The market is expecting to pause, right? But then after 30 minutes, right, so 10:15, after 30 minutes, it will be the press conference. So what I'm trying to explain is, if the ECB hiked the rates, right? So if it comes, let's say, if it comes, let's say, more than 5.25%, that it's more what the market is expecting, then it will have of course, a uptrend on, a up move on the US euro dollar, right? So then it will rocket up. But after 30 minutes that we're going to have the Euro press conference, then she will come and be more dovish towards the media. Then another sell-off will be. So basically, if she raise the rates, it will have a strong move up. But if she comes then to the media and be dovish, it will have a huge move down, right? So it will basically be like up and down if she raises. If she doesn't raise, if it is what the market is expecting, then we're just gonna, continue this downtrend on Europe. That is what I'm expecting. So the euro is likely to remain strong in the short term, to be honest, but only if the ECB maintains a hawkish rhetoric. However, this is likely to be short-lived, based on those economic data coming very weak at the moment. So the most likely scenario is a rate pause and a continued euro weakness, right? So that's pretty much what I'm expecting for the euro. Let me get back. Oopsie. Let me get back to MetaTrader. So this is pretty much what I'm expecting from euro. And I would be looking to short euro. Now, again, this is my personal opinion, guys. Please, let me take a sip of water here. Just a moment. Okay, we got some questions. I think I will get a lot of code. Let me see. On what position can we trade EU? Right. Mr. Santos, good morning. Wonderful job. Thanks very much. But on what price can I go for short positions on euro dollar? Thanks. Good morning, Rafael. How are you, man? Look, I can't give you prices. I'm not a financial advisor. So what I would suggest you to do is go on YouTube. Let me grab it here. Just a moment, guys. Go on YouTube and type ACY Securities. Let me grab it down here. Right. So go on YouTube and type ACY Securities. Click on our channel, and then we can just go into videos, and then we can scroll down a bit more. And this video here, I've posted it 12 days ago, is on how can you find an entry spot. Okay, so this would be the video that you may be looking to watch. All right, so this video here is really good. I'm gonna copy and paste this on the chat so you guys can have a look after we finish it. All right. So yeah, so have a look on this video, and then you will find out how can you engage a position on euro dollar, either on the long side or either on the short side. Okay, cool, done. Let's move on. Sorry, Rafael, unfortunately I can't, mate. Sorry, but that would be the most easy way for you to find out a position. Okay, now moving on. Okay, so where should I trade euro, right? So look, to be honest, I'm more towards a euro dollar. I would say more towards a euro dollar. Not much, other currencies. Maybe euro CHF. Let me have a look here. Euro CHF. Okay. Done. Okay. Yeah. So Euro CHF, I would like to trade on short as well. But just, have to see how can we manage this trade. I would say it is a nice position on Euro CHF. We are on that phase that I've mentioned already lots of times. Let me take this box again. Here we are on that phase that I've mentioned lots of time. We are having a weaker euro, we are having a stronger CHF, so maybe we can push down. More likely that coming back, trying to run, and then we go down. But if euro keeps weakening, all right, so if keep weakening, then of course this would be a nice trade. But then if happens the second scenario, that it's the most improbable one, I wouldn't look to long euro anymore. All right. But yeah, that's pretty much it for euro. Not much here. I would just stick for euro dollar. But you guys, can pair it up with whatever you think it's better. Let's talk about GBP now. Well, let me grab here GBP USD. There we go. Okay, cool. 4 hours. Nice. All right. So, the British pound started September on a very strong note. But since then, it just lost ground. We can see here that it's from September. We did have this push up, and then it was so good, blah, blah. And then after that, that was it, and then we just losing ground. And it's now one of the worst performance G10 currency. There is two main factors that it's influencing very bad currency, very bad pound at the moment. First one is the weaker economic data. So the UK economy is very low at the moment, and it's slowing down. It's evident that the recent contraction on the services PMI reading resulted towards this slowing down. So we are seeing those rates sort of working at the moment, and this lead to expectations that the Bank of England, will not raise interest rates as much as previously everyone was expecting. So if in the next meeting we have a pause, then it's, well, sort of expected now. But previously, no one was actually expecting a bearish trend on the pound, okay? And the second reason is a deteriorating risk appetite. So what that means is that the investors are becoming more risk averse, and they are concerned about the impact of the high interest rates on the global growth. And this made them think twice about the GBP be very vulnerable to those sell-offs, all right? So it means that they are trying to find a ground on those currencies, and they can't find on the pound, as the data is coming bad and so on. So I wouldn't expect any happiness from UK, I would say. Looking ahead, the pound is very likely to remain under a lot of pressure in the near term. And the next major data release would be the UK GDP and the labor market reports for July. If those reports are weak, if they come less than expected, it will add even more pressure to the pound. It will lose even more ground. The currency could also be very vulnerable to further sell-offs if there is a escalation of the risk aversion in the global markets. So if everything around the globe continues to go bad, then more US dollars will be bought. So people would be more willing to buy US dollars than any other currency. So US dollar would be very strong, and the other currencies would be very weak, especially the pound, as I've just mentioned about the weaker economic data and the deteriorating risk appetite. All right. So for me, I would be looking to trade GBP, of course, USD, and GBP CHF. Let me put it up here. Okay. Okay. So those two would be my preferable trades on the pound as the short, right? So as the short side, I would be looking to short GBP USD and GBP CHF. But that's my personal take. You need to measure your risk appetite. You need to do your entry trading strategies and everything else. Now, where are my targets? Where would I be looking to target pound dollar? Unfortunately, I don't have this answer at the moment. But if we go for, like, say, a daily time frame, we can see that we are on a very critical point, right? So this is what I'm saying. You guys have to, measure the risk that by your own, because we are on a support, and this can maybe lead to a up move, but it would be perfect because we are on a nice support area, one, and then we have been, oopsie, I can't move, sorry, and then we have this one as well. So yeah, I can do like that. So just a moment. So we have here, and then here, right? So this would be lovely because we're coming down, we touch on this support, and then we go up. But the data is not permitting these, especially because the US dollar is very strong and the pound is very weak. And if this continues to go ahead, if it continues to go further like that, then this support may be like a border, the price may be just boom. And then we may be looking around those levels here at 122, 123, right? So if we get a breakdown from these, if we get a daily candle, a bearish candle, breakdown, close below this area, 123 would maybe the go, right? So that would be pretty much it for GBP USD. As for GBP CHF, we are very, very, very lazy here. We are not going anywhere. And I don't know why. I would love to know, as the CHF is the strongest currency at the moment and the pound is the weakest currency at the moment from the G10 currencies. I just don't understand. They're not moving anywhere. Theoretically, it should go down. Theoretically, it should go down. But I don't know what's happening. But yes, it is a nice trade here. If it works down, that's good. All right. So that would be my two takes for the pound. Let's see, we have some questions. Hey, Steve-O, how are you, man? Steve-O, sorry. Yes, Steve-O has asked the question if I still bearish on the New Zealand dollar. Yes, I do still bearish on the New Zealand dollar. Not much as anymore, but I do still bearish. I will. We're gonna go on New Zealand dollar in, let's say, 10 minutes. Right. So that's it for pound. Pound dollar and pound CHF. All right. Let me just take a water here, guys, just a minute. Okay, I'm back. Now let's move on. Okay, we've talked about US dollar, done. We talk about euro, done. We talk about pound, done. Let's talk about the Japanese yen now. Does anyone here trading USD JPY? Or maybe any pair that has JPY? Because pretty interesting movements happening on JPY at the moment, right? So let's go for USD JPY here. Look at this. Let me see if I can take this off so don't confuse you guys. I won't be able to take this off. I'm looking to trade it if it reaches 150. Hint for any intervention from MOF. What would be MOF? That's a good question. Sorry, I don't know. Okay, so look at this, right? So last week I've mentioned that we would hit 147.5. And indeed it hit 147.5. That was really good. But then, you know, we went to the weekend, Minister of Finance. Okay, the board intervention. Okay, cool. That is the negative interest rates policy, NIRPs, if I'm not mistaken. Okay, so from the top here, we did, you know, a very nice uptrend. We were coming from a very nice uptrend, but then we had this huge gap, you know, on the market. This is lead. I've made a video on that today, but as we're here, let's talk about that. You know, it had a very tough week last week, but then we went into the weekend, and the weather remark on the, I can't remember the newspaper. It's a very difficult name for me as I don't speak Japanese, but he went to a newspaper and he said that may have the central bank may have enough information by the end of 2023 to assess you know, tweak the monetary policy. So what he means is that they will come from a, well, of course, he made very clear that they are not yet ready to make changes to their monetary policy, but it seemed very determined to stick to the current policy stance, even though, you know, there were signs of rising costs in the business sector. So he was like, yes, we may have until the end of 2023, until the end of this year, a positive rate. But for that, we need a positive inflation first, and then we see how we do. So just with this little comment, you know, the market priced up on Monday. It was a huge move down from the price of 147, let's say 147.8, all the way to 146.8. So that is 1,000 points, so 100 pips, right? Some analysts believe that the board will keep its ultra easy policy in place for the foreseeable future, despite those, you know, weather comments. And I was talking to a friend, I think it was Sunday night. My friend from Germany, actually, Lawrence. And he was like, you know, I do sell the rumors, and I do buy the facts. So the rumors right now is going to be that, you know, whether we'll change the monetary policy until the end of the year. That's not true. You know, like they have so much more to do until that happens. Then, you know, it's not that easy. You're not like you go and press a button and everything is done. It's not like that. They wish it was like that, so it would make the life easier as well for everyone, but it's not. So they need much more information. They need to gather much more data to keep, you know, pushing those entitlements towards the media. But anyways, overall, I remain pretty bearish on the yen until we see more than words from the board, exactly what I say. So, you know, they're just rumoring, but they're not actually saying anything. They're just pretending that it's going to happen. No, now we're going to do. Now we're going to do. He's just, you know, exactly. He's just Joe Borny. Anyways, pretty, you know, this just, you know, if we think about it, when you say something, right? I'm not saying that he's a liar. I'm not saying about that. Please don't confuse my words. But I'm saying, like, when you're telling someone that you're gonna do something, multiple times, oh, I'm going to start the gym. I'm going to do this. I'm going to be a pilot. I'm going to be a trader. I'm going to be whatever. And then you've been telling this person like so many times, but every time you tell them you're going to start something, you don't. Right. And then when you go there again, they're going to be like, oh, again, you're talking about this and you're not going to do anything. Right. So that's pretty much the weather at the moment. He's talking, nothing is happening. Right. And then what the market says, the market sells those rumors. So, yes, I do think that these, where is the noted pen? That these from here to there, it is, of course, a big gap, but we are coming to fill it up. Right. The market can't leave this gap. 100% it can't. We need to come back and fill it up, this gap, right? And the market did sell this. The market did buy the fact, that they thought would be a fact. But then after the market priced in and said, nah, it's just a rumor. And now the market is just slowly coming up. So as you guys can see, I'm pretty bearish on Japanese yen. I do think we can have this move up towards this area until the end of this week, right? And then after that, we may have to go like 150 or above. But I don't think we are any close to short USD JPY. I know it sounds very tempting, like, look at that, so high, right? Oh my God. Yeah, anyway, we have to see, Lawrence. Lawrence is saying that, last year on December, we had a very big surprise from, my computer can't handle that much data. No, I'm not going to come back any day. Anyways, so last year in December, we did have a big sell-off, of course, the Bank of Japan boarded a lot of Japanese yen and sold a lot of US dollars. So including making the price going lower, like I think it was like 5,000 points or something like that, 500 pips in a day, right? So in 1 hour, like quick, like very, very quick, it was just like that. So Lawrence is saying that it may happen in December again. Well, we have to see, man. We have to see. We don't know. Japan is pretty much a closed box, to be honest. So yeah, I'll look, keep longing USD JPY. Very nice area here to long. Just, patient, very, very patient. All right. Let's talk about the CAD at the moment. Where is USD CAD? Here. What's this? Okay. So the Canadian dollar, strengthened significantly last week, but it's expected to weaken in the coming week. As just mentioned, like we may have these here. We may have somewhere around here and then up to this area. All right. The main drivers of the Canadian dollar last week were like rising the oil prices. As you guys may know, the Canadian dollar has a big impact on the oil prices. The oil prices has a big impact on the Canadian dollar, and as well the BOC, the Bank of Canada, decided to keep the interest rates unchanged. All right, Ash, thanks, man. Thank you. Have a good night. All right. And then the oil prices rose after the Saudi Arabia and the Russia agreed to extend oil production cuts. So they are cutting more than 1 million barrels a day, if I'm not wrong. And the Bank of Canada also signaled that it is prepared to raise interest rates if necessary, but only if necessary, right? However, the Canadian dollar, it is expected to weaken this week due to a number of factors. First, we have the Chinese economy slowing down. So China and Canada, they are big traders partner, which could hurt the demand for the Canadian exports. And then second, the US economy is growing at a faster pace than the Canadian economy, which could make the US dollar more attractive for the investors than the Canadian dollar, right? So everything is correlated at the moment. And then third, the Bank of Canada is expected to keep the rates unchanged. So for the rest of this year, while the US Federal Reserve is expected to raise interest rates several times in the coming months. So there is a rates difference as well there. In overall, the Canadian dollar is expected to remain pretty bearish in the near term. But however, the currency could strengthen if the oil prices rise sharply, or if the Bank of Canada surprise the market with raising the interest rates. I don't think either of them can happen in this situation, but is the market, anything can happen. But in my opinion, I do keep believing that we are having a weaker Canadian dollar. All right, thanks, Steve. Yeah, man, I see you next week. Cheers. Right, so let me go pretty quick because I like to talk and you guys have things to do, right? So let's go for CHF. CHF. Let me go. Oopsie, sorry, where is it? Yeah. CHF. We'll get a very bad cold. That's not good. I have a marathon to run, guys, on Sunday. I've been training very hard. Hopefully, I can run. Otherwise, I would be pretty sad. Let me delete this. Okay. CHF JPY. All right. The strongest currency against the weakest currency. The franc Swiss had a very mixed performance last week. We did have like ups and downs. And I even thought that we could have a rise there. I thought that we could go to somewhere. Yeah, let's have a look on GBP USD. Oh, that's good. That's pretty good. Yeah, look, that's it. As of, guys, like, I don't want to be that dude, like, oh yeah, I'm the best guy in the world. I'm not. I have a lot to learn. But when you pair up fundamentals, when you look to economic data towards, there's nothing like, there's no price, there's no line on your chart that will hold something. So I'm not trying to be naughty here. I'm not trying to offend anybody, but price action is the last thing. Fundamentals come first. All right. Anyways, coming back, CHF. So I even thought that we could have this CHF JPY just raising the prices last week, but it wasn't like that because it was pretty much mixed performance. On the other hand, we did have Switzerland latest economic indicators. Indicators were somewhat like disappointing. So, which could make my, make sense like now because it was pretty mixed. So, sorry guys, I'm gonna be very sick. Which could have been like seen as a conflicted with the prevailing cautions attitude in the market. So it's like, CHF, cool. What do you think about Swiss? First thing I say about Swiss, what do you think on your head? Oh, it's a safe haven. Okay, but the data is not that good anymore. Oops, that's not good. Let's go for US dollar. So all the attraction last week was on US dollar. It was like the rising star, right? On the other hand, the Swiss franc would manage to outperform 4 of its 7 major counterparties. All right, so it was one of the strongest currency against the 7. So it suggests that in the overall sentiment of the risk aversion, it continued to dominate the financial landscape. And it's very scary, to be honest, because if all of this pressure goes to US dollar, imagine what it can happen. It's going to be huge, right? The SNB, the Swiss National Bank, is committed to selling foreign currency to maintain the strength of the Swiss franc. They already say this. So it would help to keep inflation as well in check. And also it would allow the SNB to normalize its balance sheet. The SNB is expected to continue this policy in the medium term. So the monetary policy meeting is scheduled for later this month on Swiss. And the forward curve is discounting a 40% chance of a rate hike. So there are 40% of the market expecting a rate hike on the Swiss. For me, it seems too high. Okay, if the Swiss franc does dip, it would be an opportunity to buy. Okay, to be honest, it would be an opportunity to buy. I'm pretty long on CHF, as it is a haven currency, safe haven currency. Okay, so overall, I do believe that Swiss franc will continue to strengthen as long as the risk aversion in the market increases. So I would keep longing CHF. All right. Thanks, Lawrence. Thanks, man. Thanks for your time. Thanks for coming here. Very nice to see you here again. And have a good day. Have a good day. Tol, what do you think about AUD CAD? I do think that we can have a even deeper and deeper on AUD CAD. I even have a short position on AUD CAD at the moment, so I guess yes, we may have even more down pressure over there. Actually, I'm going to talk about the Australian dollar now. So let's have a look on AUD USD. AUD USD. We are very close to the end, guys. Just AUD and New Zealand dollar, and then we finish it. All right, so let's say 5 minutes. I don't want to keep you guys for too long here. All right, so okay, Australian dollar. The AUD fell pretty sharp early in the week last week. All right, so we have this huge movement to the downside here last week due to disappointing economic data from China, as well as the RBA decision to keep the rates unchanged. So it wasn't good for the Australian dollar. For the Australian dollar, it wasn't any good. Okay, someone sent a message. Let me have a look. Raphael. Thank you so much. I've seen some things on the EU. My bias on EU, I can see you is sell bias because weekly resistance one is, but the pair have gone as far as almost. What is it? Okay, I get back to this later. So the RBA, coming back here for the RBA, the Reserve Bank of Australia, decided was surprised to a lot of people, but it was kind of widely expected that the central bank would raise rates in order to combat the inflation. However, the RBA say that it believes that the peak of inflation has passed and that there is not necessary to raise rates this time. All right. So, and as well, the weakness of the AUD was also due to a slowdown in the Chinese economy. The China PMI, the services PMI, fell to a 16-month low in July. And the economists expect the economy to slow further in the coming months, right? So this has a direct impact on the Australian dollar. And the release of the Australian consumer and business confidence data this week, it was negative as well. All right, so this week already we had a consumer confidence for Australia, the NAB, National Australian Bank, and they released the consumer confidence, and it was pretty much dovish, pretty much bearish. However, we have to still check in how the China will develop towards the AUD. But for me, all of those economists expecting the China to slow further in the coming months, I would look to short Australian dollar. Overall, I do believe that it's going to be weak in the coming near months. The RBA decision to keep the interest rates in China would it had a lot of weight on the currency. As well, as I've just mentioned, this slowdown in the Chinese economy will also put even more downward pressure on the Australian dollar. So I guess we are on a good spot, but would be preferably to see a little bit more up. So let's say like somewhere around here and to go down. That would be pretty much it for Australian dollar, AUD USD. And then last one, and then we finish it because it is already more than 1 hour. The NZD. Well, let me grab here NZD USD. Oopsie. There we go. This one. Let me take a sip of water here, guys, pretty quick. Okay. Done here. Take this off. Okay, so New Zealand dollar. NZD USD. Let's talk about New Zealand. We already know how the dollar is performing. So the New Zealand dollar had a very mixed performance as well last week. Some gains and some losses, right? So we did had some push ups and some push downs, but we ended up the week on a positive close, right? However, the overall trend continues to be a downward trend, as the currency was weighted down by the risk-off sentiment in the global markets. This New Zealand dollar, New Zealand has a big influence on China as well. So pretty much correlated with Australian dollar as well. So everything that happens in Australia, New Zealand, Japan, and China will be everything correlated. So there were no major economic or political developments in New Zealand last week. So the currency was very largely driven by the external factors. And the major factor, the main driver was of the risk-off sentiment, was a series of disappointing updates from China that I've just mentioned, including the weak manufacturing data and the slowdown in the housing market. Looking ahead, I would, there's no major economic data due to New Zealand on this week. As the result, the New Zealand dollar is likely to remain volatile and to be driven by external factors like China, Australia, Japan. And the main drivers of volatility would be like those ones I've mentioned, like, maybe China releases something, maybe Japan releases something that would be opposing the New Zealand dollar as well. I would look, keep more neutral towards New Zealand dollar, keep more neutral to bearish. All right. Now we could maybe see as well very same price action as the AUD somewhere around here to then go down. All right. So that's it for today, guys. We talk about New Zealand, we talk about Australian dollars, CHF, CAD, JPY, pound, euro, and the US dollar. And that's pretty much it. Yeah. Let me see this question. So the question is that what I think about I agree with you, Rafael. Look, my personal take on euro dollar would be looking to go short, but now you have to find out your own entry points and your own strategy, your own take profit and stop losses. So yeah, that's what can I say for you, man. Hopefully I can help you out with that. All right, guys, so have a wonderful day, wonderful night. I don't know where you guys all are at. And I see you in the next Tuesday.